Here's a summary of McDonald's Q3 2025 earnings call, designed for clear and concise delivery. Introduction. We're here today for McDonald's third quarter 2025 investor conference call. With me are Chairman and CEO Chris Kempczynski and CFO Ian Borden. Overall performance highlights. McDonald's delivered a solid third quarter, demonstrating resilience in a challenging consumer environment. Global comparable sales grew by over 3.5%, with positive growth across all segments. Global system-wide sales increased by over 6% in constant currency, reflecting contributions from new unit openings. Key financial metrics and performance. Revenue and profit. While specific revenue and profit figures aren't detailed in this excerpt, the call emphasizes growth in comparable sales and system-wide sales as drivers of performance. Gross margin. Total restaurant margin dollars surpassed $4 billion, a 4% increase in constant currency and a historic milestone. This highlights the strength of the business model amidst inflationary pressures. U.S. performance. Comparable sales increased 2.4%. The company achieved positive comparable sales and guest count gaps against competitors. Snack wraps, relaunched in July, were a significant success, with nearly 1 in 5 customers purchasing one in the initial period. The McValue platform, including the Daily Double, continues to perform well. Extra value meals, EDMs, were reintroduced in September to address value perceptions, with ongoing national advertising campaigns planned for November. Internationally operated markets, IOM comparable sales were up 4.3%, marking consecutive quarters of growth above 4%. All IOM markets delivered positive comp sales growth, with strong performances in Germany and Australia. Germany saw its strongest comp sales in 2 years, extending market share gains to nearly 4 years. Australia is building momentum with a new management team and franchisees, gaining market share for the second straight quarter. International developmental license markets, IDL comparable sales grew 4.7%, led by Japan's consistent guest count growth. China continues to face macroeconomic pressures, but the company remains confident in the long-term opportunity, investing in new restaurants and training. Earnings per share, EPS. Adjusted EPS was $3.22, including a 4-cent benefit from foreign currency. On a constant currency basis, adjusted EPS declined 1% due to a higher effective tax rate, which offset an increase in adjusted operating income. General and administrative, G&A increased due to $40 million in incremental marketing spend for the U.S. EDM relaunch, higher incentive compensation, and strategic transformation investments. Management's forecasts and outlook. Consumer environment. Management remains cautious about the consumer, particularly in the U.S. and key international markets, expecting pressures to continue well into 2026. U.S. sales trajectory. Anticipate U.S. comparable sales growth to accelerate in Q4 compared to Q3, driven by the anniversary of a prior year incident, the Monopoly promotion, and the EVM reintroduction. International sales trajectory. Expect operating conditions to remain consistent, with some deceleration in comparable sales growth due to tougher year-over-year comparisons, but a pickup in 2-year stacked growth. Inflation. Expect above-average inflation in the coming year, particularly for beef prices, which will continue to pressure the industry. Tax rate. Projecting a full-year effective tax rate between 21% and 22%. Q4 foreign currency impact. Estimate of 5 cents tailwind on adjusted EPS for Q4. Significant risk factors. Challenged consumer environment. Persistent economic pressures impacting consumers, especially lower-income demographics. Inflation. Ongoing elevated inflation in key cost areas like wages, food, especially beef, and paper. Intense competition, particularly in markets like China, leading to pricing pressures. Operational complexity, managing new product introductions and supply chains effectively. Key takeaways from CEO Chris Kempczynski. Accelerating the arches. Strategy. Performance is anchored in this strategy, focusing on value, menu innovation, marketing, and affordability. Bifurcated consumer. Acknowledges the persistent trend of declining lower-income consumer traffic alongside strong higher-income consumer traffic. Value is paramount. Emphasizes that delivering industry-leading value is a foundational expectation and more critical than ever in the current macro environment. EVM program. Pleased with the early performance of the Extra Value Meals program, designed to regain value perception with core menu items. Success will be measured by gaining lower-income traffic and improving value scores. Menu innovation. Highlighted the new category structure, chicken, beverages, beef, driving innovation. Beverage test. Excited about the promising initial results of the U.S. beverage test, which is driving incremental occasions and higher average checks. Chicken opportunity. Driving progress in chicken offerings with successful launches like snack wraps in the U.S. and chicken Big Macs in the U.K. Resilience and local action. Stress the importance of global scale combined with local actions to serve communities, referencing the company's 70th anniversary. Grind it out mentality. Quoted Ray Kroc, emphasizing the need to persevere and execute in challenging times. Key takeaways from CFO Ian Borden. Focus on controllables. Solid results are driven by focusing on value, menu innovation, marketing execution, and operational improvements. U.S. performance details. Provided specifics on the success of snack wraps and the McValue platform and the strategic importance of EVMs. EVM support. Detailed the corporate investment in EVMs, including $40 million in marketing and a 50% co-investment in effective menu price reductions through the end of 2025. Support will transition to a different form in Q1 2026 and cease thereafter. International performance details. Highlighted strong performance in Germany and Australia, with specific initiatives like the Taste of the World campaign in Germany and pricing strategies in Australia. China challenges. Confirmed ongoing macroeconomic challenges in China, but maintained confidence in the long-term opportunity, citing investments and partner strength. Financial strength. Emphasized McDonald's ability to invest in value and affordability initiatives due to its financial strength, even when competitors might be more cautious. Breakfast segment. Noted that breakfast remains the most economically sensitive daypart and continues to face industry-wide challenges. McOpCo margin contraction. Explained that while top-line growth is the driver of margin growth, the Q3 U.S. growth of 2.4% was not sufficient to fully offset inflationary pressures in wages, food, and paper costs. Food and paper costs. Anticipate U.S. inflation in this basket to be in the low to mid-single-digit range for the year, with beef inflation being elevated but managed by strong supply chain. Future outlook and strategy. Long-term value. Focus on executing the Accelerating the Arches strategy to create long-term value for stakeholders. Capital allocation. Priorities remain investing in business growth, followed by returning free cash flow to shareholders via dividends and share repurchases. Global expansion. Confident in the development pipeline, on track for 50,000 restaurants globally by the end of 2027. Dividend. Announced a 5% dividend increase, marking the 49th consecutive year of dividend increases. Beverage platform. Confident in beverage as an incremental opportunity and exploring global testing of the beverage platform, mindful of competitive value pricing. Predictability and value. Emphasize the importance of consumer predictability and consistency in value offerings, particularly with platforms like McValue and EVMs. In summary, McDonald's Q3 2025 performance was marked by solid global comparable sales, growth driven by disciplined execution of their Accelerating the Arches strategy. While acknowledging persistent consumer headwinds and inflationary pressures, the company is strategically investing in value, menu innovation, and digital capabilities to drive traffic and long-term growth, with a clear focus on delivering consistent and predictable value to their customers.